is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, it's a beautiful day. Get our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Hi, everyone. This is Basil Chapman sitting in for Tom O'Brien, who's away this week, and it's my pleasure and honor to be here sitting in for Tom. We're looking at a very interesting market, and here's what I mean by that. Look, the Dow's up 255 points at 26,683, but actually it is more in the middle of its big trading range of 29,568, the high of the week of the 14th of February. Took a 39% dive. I mean, I don't think you can expect another 30% dive in 1 year. So I'm going to introduce you to another concept as we move along. So it dives to 18,213, ratings up to 27,580, pulls back to about 24,400, and here it is at 26,683. Now, what's really important, I'm pointing here, this is the daily chart on the left, this is the weekly chart in the middle, and on the right is the monthly. We've got the candle for July already with a lower high than the month of, there we go, then June of 27,580. So that makes it a peak A. I call it a gray A. Why? Because we haven't got the MACD turning positive yet. We haven't got the stochastic up at 80%. It's at 66%. We do have the on-balance volume, that blue line, really strong. So the price itself is a fantastic move. From the March low, 18,213, to last month's high of 27,580. But wait a minute. Here's this pattern that I call the Chapman Wave inside track repellent zone. Look, we can't get out of it so far. We've tried to, you push above that green line, you go into the 27,000 area. That's going to be very good. This will be 27,000. Let's make it 100. 27,100. All of a sudden, you're talking about something very different. Why? Because it's a pattern that I call the rectangle formation. That rectangle formation, it's a narrow one, can last a lot longer than your patience. Here we are. We're looking at a rally that has taken 1, 2, 3, 4, 5, 6, 7, 8. Since the high that was made, the high of 27,580, and that was back in June, we've taken 7 weeks, and we haven't broken out of this That's how powerful a rectangle formation can be. Well, in the daily chart, we've got the same thing. There's the resistance. We're just about to just touch that resistance, and that'll be at 26,730. We're at 26,687 so far. Really nice pattern, but I suspect the arch formation, let me just do this real quickly, and then we can get on with all the numbers. In the Chapman Wave methodology, we're looking at straight lines up, straight lines down. The cup formation, it could also be a V, but it's the same principle. You're going from one point down and then come back to that point. How you deal with it on the left side to the right side is really important. Or the arch formation, how you deal with the left side, rallying and then coming back, really important. Why is this red? Because there's a pattern that I call the lowercase h, the dreaded H. Why? Because if you make a come down sharply and then rally and then fail, take out the left side low, you can go quite a bit lower. Positive is when it's green and you're moving, running up, and then you make this cup formation and you take out the left side high, you can go high. We saw that in gold almost every couple of days for the last couple of months. So with that in mind, and with something else that I talk about very often in Chapman Wave methodology is to try to identify the lowest low, and then we merely count each successively higher peak. alphabetically in sequence, A, B, C, D, E, F, G. That seventh highest peak where you might have to alternate, but it's at D, the fourth highest peak, that other things can happen. How important is it? Oh, it's a little important. Why? Because look, the peak D that was made on the 8th of June at 27,580, we haven't even taken it out yet. We've taken all this time and we haven't taken it out. Hey, wait a minute. That was peak D in the weekly chart at 29,608 back in February, 39% decline. Monthly chart, same thing. That's how important they could be. So where are we? Let's just do this again. We'll do a quick recap. The Dow right now is up 255. It's making the second arch formation. It's really trading into a rectangle. And the S&P, very much better action than the Dow. S&P is broken out. It has gone to a high today of 3302.73. Well, 3393.52 was the all-time high, but let's face it, this is really good. It's leg E in the weekly chart. The moving average convergence divergence in the weekly is really strong. Stochastics at 94%. The on-balance volume is good. And you've got that crossover in the monthly chart. So far, the S&P stronger than the Dow, acting better than the Dow, and it has 500 stocks rather than 30. And wait a minute, look at the QQQ, all-time high today by 20 cents. And then all of a sudden, he has another burst of energy just a short while ago. It goes to 270.15. This is the NDX 100 trading vehicle, the Invesco QQQ Trust Series. 269.37 right now. It has gone to a new all-time high. Here's this cup formation right here. Put it in. There it is. And what's important, we've gone finally to that leg D in the weekly chart. And that's saying from this moment on, we're looking at the chance that we could start a consolidation. The Dow has already been in consolidation. I'm going to show you something really fascinating in a minute. IWM, the Russell 2000, very strong, up 2.5 today at 149.85, up 1.7%. That's very nice action, but it's still in a rectangle formation in the weekly. It needs to pierce decisively the 153.39 high of the 8th of June. Wait a minute, the weekly chart is at a peak D, and it's taking its time, but in that trading band, look at the monthly chart. That monthly chart is slowly improving, but you haven't got the MACD turning up, and the stochastic's good, but not great at 62%. On-balance volume has been very good. So I'm going to decipher it in a short while. I just wanted to show you something here really quickly. This is a pattern that I've been discussing for quite a while. I had a webinar for my subscribers, to my opening call subscribers. That's my daily newsletter, and I'm also the host at noon to 1 p.m. Eastern Time of the Tiger Technicians Hour. So there's something I discovered a while back, that whenever there is bad news, it isn't the bad news, it is the response to the bad news. In fact, very often you've got at least 2 or 3 kind of news events that are filtering out there, and they come in, they go out, they come in, they become important, then they disappear. But when the market starts to take them seriously, that's when you get that December smash going into the 2019 December low, 2018 December low. Well, we're looking at the chance that there's a matching pattern here, and I'll talk about it. I'll be back.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back. Basil Chapman sitting in for Tom O'Brien, the host of the Tiger Technicians Hour, noon to 1 p.m. each day, each market day, that is, and the author of the opening call daily newsletter. Now, what we're looking at is back in August. Well, there was a pullback that started in, there we go, right there. So the pullback started right on July, I believe it was the 16th, July the 16th of 2019. But it was much later. It was round about the 31st, at the end of the month, when the market suddenly took a dive. And it landed up on the 1st of August, making a low. And then what happened is, from that pattern, which was like a rectangle pattern, almost like a cup formation, there was a rally, and then went sideways, pulled back a little bit, and then it pulled back deeper. But that deepness was only about halfway into the entire decline from July to August. So wait a minute. We made a high. Remember, we just discussed that. That was on June the 8th, right there, at 27,580. Pulled back sharply, went sideways in a cup formation, started to rally, went back to the top, didn't make a new high, went to the new high, to the recovery high of 27,071, went sideways, pulled back, and my question over the weekend when I sent this out, I'd already done one last week and the week before, was, are we here? In other words, are we just about to have a bit of a bounce, right? Just like there. And then we come down and we start to go sideways, and then we have another pullback. Will this pullback take out the 25,500 level? Will it take out the low that was made on the 15th of June of 24,843? Those are obviously big questions, and no one can answer that. We can just suspect that certain things are going to happen. But everything about this says that we've got a dark news cloud cover. It's not red. It's not like it was going to that high that was made back in February at 29,568, where we plummeted down 39%. But it's blue. Blue says you got to take this seriously because we aren't out of the woods yet. And then I made it a little bit smaller over the weekend. I said, it's still in dark news cloud cover, and I suspect this week it's going to start increasing in color. I don't know. I haven't got really a measurement for that, but it'll be getting a little stronger. I suspect that's the way it is. And we've got politics, we've got the coronavirus, we've got the economy, we've got the Fed funding, just a lot of things. All right, so where are we? The IWM is showing more strength. Does that mean that the Russell 2000, the small caps, are going to start to rally much more? Well, they're holding very well. And my suspicion is that we won't know until the next big pullback where you've got at least a 1.5% pullback in most of the indices. Does the IWM do what it's been doing lately and make it a 2.5% when the others are falling 1.5% and then have these sporadic up days? I like what I'm seeing right now in the shorter term, but I think it's still stuck in that rectangle formation. Look at gold. So gold is, at this point, it's up 6 at 1992. You know, if anything reflects the uncertainty right now, the fear factor, the giving out of money, just oodles of money being given out, regardless of whether it's for a purpose or not. The money's going out. You can determine whether or not you agree with it. Doesn't matter. It's there, and that's what the Fed's doing. We've got to deal with it. And the way to deal with it is to say, well, gold, on a technical basis, the moving average convergence divergence in the daily is still very strong. The stochastics at 86, starting to move down a little bit below 80%. You start getting a little concerned, but so far, so good. On balance volume is very good. Get in what I call this is the one time you can say overbought. The rules for the stochastic is that when it gets over 80%, it's overbought. When it's under 20%, it's oversold. I say, you want to see it holding above 80%. That's when you want to be buying. That's when you want to be holding. That's when you don't want to be shorting, because that's when you've got security that the stochastic is giving you a sense of stability, of support, etc. So this is very good. But in the OBV, the on-balance volume, this blue line, that's where I do talk about overbought, because that's where you start to see something there. You can see right there, you've got to pull back. So you've got to be a little careful here. And the weekly chart, leg D at D, we always get a little nervous, and you can see the Chapman wave 1-1 to the upside. We just missed it by about 3 points. That was the target. And here's this Chapman wave. It's like a propeller shaft right here, 1-1. This is the first blade. Then you get the fulcrum of the midpoint of the propeller, and then you get the blade going up. So everything there, leg E in the monthly chart, really strong. Silver, same thing, not as strong, but still very good action, holding to up 25 cents at 24.47. Now, what's we got a caller. We've got John in Philly. Sorry, John, I nearly missed you. How are you doing?
I'm doing very well, Basil. How are you?
I'm well, thank you.
Good, thanks. I wanted to ask you, and my apologies if I missed you discuss the NASDAQ 100 in your first 5-10 minutes. But regarding the NASDAQ 100, it has pushed up here just over 11,000 now 3 times. July 13th, July 21st, and then today, August 3rd. My question is there anything in your work that would lead you to have a guess which is higher probability, a little triple high here and a pullback or decline of some sort, or a rally extension well past this level?
Okay, so let me do a couple of things. For some reason, I don't have all my Chapman wave notation on the index 100, and as you know, I've done it maybe 1,000 times. I don't know where it's gone. But anyway, let's just deal with, because the QQQ has exactly the same pattern. If you look at the weekly chart of the Qs, and let me just do this, I'll make it a little thicker. I'm not sure if you actually be able to watch my charts as we're talking, but here we go. So I'm going to draw one trend line right there, and then I'm going to draw another trend line. And I have a rule of thumb. This is a little bit wider than what I normally would be talking about, and it's a pattern that I call it. It's like a little worm crawling up the bark of a tree, up the limb, and it holds this. And I'm going to make this nice and thick so you can see exactly what I'm talking about. And it can do that for quite a while. And each time you think, it's about to change course, and it just holds it. And on the upside, you've got a trend line as well. I'll make that blue, or make that green, because if it goes above it, it's going to be very good. There you are. So what I'm doing is I'm drawing in a channel line, and channel lines can last a long time. So what's really important about this, together with the channel line, which shows that there's tremendous support based on the trend line itself at 257. And what's interesting is just a week and a half ago, we went to 251. So that would say if there's another pullback like that, you come outside of that trend line support level. So I wanted to tie it together with a couple of other things. Are you able to hold on?
Thank you. Yes.
Okay. So, folks, we're looking about the QQQ, which we're talking about that. That's the Index 100. And we're going to go in greater detail into what can happen and what it would take to really get a sell-off or a breakout. I'll be right back. Basil Chapman sitting in for Tom O'Brien. Now it's up 244.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman sitting in for Tom O'Brien, and the Dow's at 241, S&P's at 25, and we have John in Philly on the line, and he had a great question. The question, am I summarizing the question correctly, John, when I say, what would portend a deep correction, and what would portend a breakout right at this level where the QQQ or the Index 100 trading vehicle has made an all-time high? Is that the question?
That is the question exactly.
Okay, so the answer is, on the upside, a close above I'm talking about the QQQ and the Invesco QQQ Trust Series, a close above 280, which sounds like a lot, but it's only we're it's about 11 points from here. Look how quickly we just did 11 points. It was in 2 days or something. So a close above, going into the 280s, essentially says two things. One is that you've raised the base of support, at least in the short to intermediate term. And number two, it says that those fund managers, I had a question in the demo which pertains exactly to what we're talking about. I was saying that gold is in a sense, is this measure of fear. And Ruby said, Basil, are you serious about the fear in the market? I sense no fear, volatility. Volatility, yes, but no fear. And I answered and I said, Ruby, fund managers are tearing their hair out, not knowing what is next. And many have missed out on a huge move if they weren't fully invested in the top nifty, let's call them 15 stocks or 20 stocks, even 5, the best 5. Most of them might have it as a little bit of their portfolio, but they've got a whole mix of other things. And the other things, as you can see, if you look at a chart that was shown by Larry Pesavento the other day, where the including the top stocks like the Microsofts, etc., in the S&P is one chart that's screaming to the upside. If you exclude them, it's just a flat chart. So I think that, yes, I think there's a lot of nervousness here because there's nervousness. People always think of nervousness as the negativity of a market going down, but there's a nervousness of missing out. And I think that is part of it. And that's why we've had the speed to the upside. And you must agree that looking at this weekly chart from the low that was established on the 23rd of March at 164.93, look at this weekly chart. It's that treat.
I'll talk to you in a minute. I'm on the conference call.
So it's this move that hasn't got very wide parameters, each bar.
No, that's the SRX.
But it just goes higher highs and higher lows. And look how many bars there are between peak A and B, and then B and C. And all of a sudden you've got 1 week, 2 weeks, and the third week you've got leg D. Now we're starting to see the speed or the acceleration of the fear of missing out. And that's the reason why I said I'm waiting for leg D to see what happens, because if we make a peak D and then we start to see a decline into the 247 area, that would say to me that 246 is the 200 period, sorry, is the 14 period moving average in the weekly chart. But if we actually start to, if the market starts to deteriorate because of not one, but potentially two news headlines, one is fine, but if there's two, I suspect that the NDX could have a deeper pullback, and that's when we're going to see whether or not the Russell 2000, whether the different sectors, the cyclicals that have been failing, whether the bank stocks, because if there is a pullback here, normally you would see money flow from the equity side into the so-called safety of bonds. Well, we've already seen bonds screaming to the upside. The TLT made a recovery high the other day, and you were the one that called me. I think it was maybe 2 months ago. It might actually be just a tad longer than that. We were down here. We were somewhere around here at about 160, and you said, what would I be looking at? And I said, John, I'm going to draw this in. I'm going to draw the lowercase h that goes to a lowercase, another arch that looks like an M pattern. And I suspect that we're going to rally. And if we rally close above the high that was made back on the 24th of April, which is 172.15, then we could go higher and even test the 179.70 high that was made. That was a screaming high that went on the March when the market turned up, bonds came down, so the money went back into stocks. And now here we are, we're at that arch, and we just missed by 70 cents or something. Oh, no, I think we might have just made it. No, 172.15, and last week's high was 171. I shouldn't have put that C in. That's just another arch. So as I'm putting the whole potpourri of the sequence that I'd be looking at gold taking a bit of a breather. And all I'm saying is a breather. I'm not saying that gold has to smash. and the dollar has a bounce, and at this point, it wouldn't be a big rally. It would be more like a bounce, going from the low of 92.55 on Friday, maybe up to the 94.80, 95.50 area, as long as it holds 92.55. And at that and also if you look, you can see that copper is in a trading band, is holding very nicely. So I don't want to dismiss and say, oh, here comes the big crash. What I am saying is that I think that the cues are going to be the cue to tell us whether or not there's just another one of these little minor pullbacks that goes to this pink line, and that would be key support at 258, or whether or not we're not ready. Because, look, all of a sudden, Microsoft gets news today, and Microsoft is up 11 points at 216.06. I was waiting for Microsoft to be added to the list of stocks that I wanted to see a leg D in the weekly. Who knew what the news was? All of a sudden, was it the TikTok news? Whatever it is, the news comes out, Microsoft spikes higher, and just from 216.39 goes to 217.64, and that was part of the NDX 100 as well. So you can see that there are just a handful of key stocks in the NDX 100. I'll even call them the NDX top 20, top 30, that have not quite completed their cyclical move that I'm looking at to maybe make weekly peak Ds. They might still have to do it, but a number. In fact, you can go look Amazon. You can go through the list. Peak D, and it's stalled for 3 weeks. Even though Amazon came out with spectacular news. Google, Alphabet, peak D, 2 weeks, and it hasn't made a new high. Apple, that just spiraled higher. And where is it? It's in leg D. So if I'm putting the whole package together, I'm saying right here, today was the day that I said, if it's possible by Monday or Tuesday, we make that leg D in the Qs. That's where we've got to start being a little bit more cautious. That doesn't mean to say you've got to sell everything. Still a lot of fund managers that are looking to buy any dip. But this is where I would expect we're going to see the evidence of whether money flows a little bit out of gold, goes into the dollar, money flows out maybe of crude oil. You're looking at now a potpourri of events that says that the upside could begin to see a lot of resistance. And the whole thing about it, to answer your question, is that I think this is the week that we're going to see the evidence, because come Friday, if the Qs have suddenly given back the gains and they started to slip and getting towards that trend line support, that's going to be really important to monitor. And for whatever reason, if there's a spire and you're suddenly looking at the Qs at 281, that is, you're going to just force people, you're going to have a kind of a blow-off to the upside. Hope that answers your question.
Basil, thanks so much.
Thank you very much for calling, John. We'll be back, folks. Basil Chapman sitting for Tom O'Brien.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Folks, we're back. So when I had the pleasure of co-hosting with Tommy Jr. this morning at 10 o'clock, because Tom's away, and I'll be doing that again tomorrow and Wednesday, Tommy brought up natural gas. He had a question, I think it was from YouTube, about natural gas, and we were at about, I can't remember, I think it was there at about 1.98, I think it was. And I said to him, quickly did a little drawing. There's the cup. Remember, I spoke about cup formations, arch formations. Here's the cup formation. I said to him, if it takes out this Chapman wave inside wedge, dashed green targets resistance line, that's very good. And it does portend a move in any case to the left side high in the continuous contract of 2.092. We were looking at it and amazed at the speed with which it climbed. And then intraday, it went all the way to 2.154. It's trading it now at 2.096. This weekly chart, that's the first decent breakout to the upside we've got. So natural gas, I think, is in play, and it's turning the 1.9 to 1.8 area support. I'd have to say right now 1.93 to 1.89. I think that's your support, acting very well. Yes, we've got Mark in Fort Collins. Mark, how are you?
Good, Basil. How are you? I'm
very well. You'd like to look at
a couple that we've gotten stopped out of. Wondering what your thoughts are on them now. BCRX, and if you have time, X.
So this is BioCryst Pharmaceuticals, autoimmune and antiviral. That's what they work on in the biotech sector. It had a high back at about 10 in 2019. It pulled back to just over 1. And then it had a really big run up. It went to a peak D. Remember, D is the fourth highest peak we're always targeting. It went to 6.29 on the 12th of May. It pulls back to trough E at 3.84, has a rally, and then kind of fails underneath that previous high at peak C at 6.03. And then what it does, this is the pattern, the exact opposite pattern of the Qs. Remember, I was drawing that channel just a minute ago. So now we've got this down channel going all the way. There it is. And let's do another one. It did pierce it fractionally, but it's okay. And now it's attempting to break out. So on a purely technical basis, the fact that it's trying to break out without retesting 3.84, the low was 4.02? Yeah, 4.02 on the 31st of July on Friday. I like this. Now, you don't have a position, but you're looking to maybe starting a position. Is that the way it is, Mark?
Yeah, they had some news today about some trials that are going on, and they have earnings on Thursday. So I was curious what your thoughts are.
Yeah, they have earnings on Thursday. What's the other one that I was told has earnings on Thursday? That we were looking at. Oh, I can't. Was it Infineon?
Upwork is tomorrow.
Oh, Upwork is tomorrow. Oh, I forgot. It's time's flying.
Yeah,
okay, Upwork.
I was able to grab that one on Friday and got out this morning when it hit 1680. So.
And here it is, 1689, up 1.87. Anyway, so these are the secondary and tertiary tech stocks that we were looking at as well in my newsletter. So this is what I'm looking at. 440 right now, up 33 cents. If you see this arch formation in the weekly chart, I always love this pattern. It looks like, I guess it looks like a kidney. It's got this U, it's then a second U forms, but the right side's a little higher than the left side. This is tough because it's based on earnings, and it's how the market reacts to the earnings. And I'm just going to say the fact that it's come down sharply, it has to be a really great surprise for it to spike into the fives and then hold the fives. So I don't know with a stock that's at $4.39, if I want the risk, look, it's only up 32 cents, but that's 7.86%. So to tell you the truth, if you didn't tell me that it was earnings, I would say to you, I like the fact that it's come down, that the MACD and the daily is flattening, the stochastic, it's just flat at 8%, but it is starting to rise today. If the stochastic can get into 12%, I think this can start a little bit more of a rally, but I don't want to take the risk of being wrong because I don't have a confirmation here. You see the pattern on the left when it made that 629 high on the 12th, and then it came down to the June 23rd low of 384. This is very similar, but there might be a couple of bars still to go to test the 200-period moving average of 393. Well, 441 to 393, you got yourself, 50 cents. It's 12% risk. So that's just here without the news. So I'm just going to say to you, if you didn't tell me about the news, I would have said, you know what, this is the time to restart because I know that you enter a few positions, you build up your positions. I don't have a sense yet of the uptrend, and I would prefer to sacrifice, in this case, some of the downside by waiting for more upside action. So it might be one of those cases where you wait for the day after the news. If it spikes higher, you wait for a pullback because you know that's a good response. But if it pulls back sharply, it could take a while to come back because it means that if it breaks underneath 3.84, you've got a massive overhead resistance and you've got the 200-period moving average. This is the one time I'm not going to say, have a little nibble here and let's see where it goes. I'm prepared to sacrifice a bit of a gain. Looking out longer term, that peak C in the monthly says it should attempt at least one more time to get at least to the 6.10, 6.30 area. That's about another, 40-something% or more from here. But I think I might want to give up the risk at this time. Only if it drops, then you're stuck. If it slips underneath that it closes under that 580 level, it could stay down there for a little while. So that would be, I just don't want the risk, and I don't think you want it either. I'd rather have the risk of missing even 80 cents or a point on the downside for the upside, because if it starts to break to 460, 510, then it's going to be a quick run to test the high that was made on the 20th of July of 529. So I'd much rather it's just too risky.
Okay. Do you feel the same way about U.S. Steel right now, or is that another?
U.S. Steel, I think it's getting a little too late in this whole political aspect for the president to start talking about an infrastructure play. He's got to, he has to get his whole group enthusiastic. Then he has to try to talk the Democrats in. I think it's telling us that there's certain parts of the cyclical side that are maybe not so good. I wouldn't be surprised if Alcoa, because it's in steel, it's in the aluminum, and aluminum, if I'm reading this correctly, I read over the weekend, I thought I read that there's a sparsity of cans for beer, something like that. But it seems to me this is a little bit better. I don't know how much upside yet because it's still, it's been devastated. Aluminum, Alcoa aluminum, it's gone from the 60s 2 years ago to $5.16 just 5 months ago. So I'd be avoiding X, but steel, if it still pulls back one more time, I think that might be Alcoa aluminum pulls back one more time, trading at $13.62. It's actually up 62 cents today. Folks, this is a stock that we did have. Some people got stopped out. We had a little bit of a profit and then loss, and I said, let's just hold off. So this is now acting quite nicely again. So this is the better one.
Thank you.
I hope that helps you. Thank you very much for calling, Mark. Folks, we'll be back for the final segment. Basil Chapman sitting in for one and only Tom O'Brien. I'll be back in a few minutes, and we'll do a wrap-up.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. Basil Chapman. Been sitting in for Tom O'Brien, and I'll be back tomorrow morning, actually, with Tommy O'Brien at 10. My show is usually noontime to 1 p.m. The Tiger Technicians Hour. My daily service is called The Opening Call. I was asked about how important are those peak Ds? Well, I think those people have watched me here for 18 years or whatever the number of years I've been here, my thousands of charts that I've posted. Ds are really important. Look, here's a stock that we owned from $4.43 called Sirius Corporation, Global Blood Transfusion Components. It made a peak C. We call it a C1, and if it just fails to get there, I call it a C2. But very often the C2 again eventually goes to D. Today, it just went to a leg D in the daily, but I'm waiting for a leg D at $7.50, a little bit further, for the weekly chart to get to that D. Then we have to make some decisions. So that's how important it is. So, for my subscribers to my opening call, I like stocks of all different prices. I like to have very, very low price stocks. We've got one that's just touched 99.36 today, all-time high. That's Agilent Technologies, scientific solutions for labs and businesses. We've been in since 70. Here it is at 99, and it's in F/C, so it's still looking quite good. And that's why I'm saying you don't have to be rushing here to short anything. We will get information, a lot of information over the coming few days. And as I said, the QQQ, we waited for that leg D. It made it today. Now it's on notice to say, okay, what do you do for us next? What are you going to do? So that's the way we stand. And the other question was, are you still long the Dow stock? Yeah, we're long the Dow from the March the 23rd. We got the exact day of the low. We got option call position. Some people still have it, rolled it over. And from the 10.5 area, it's now trading at about 65. The other question is, in the diamonds, we're still long from 210. So just under 211. So it's just under 21,000, basically. And I feel strongly that I think I'd like to hold that because we've done that 39% correction. I think that if we're in for a rolling correction with other stocks taking the place of the biggies. If they take us down, we'll see what happens. The day is young. Well, the week is young. We've just started August. Have a wonderful evening, folks. Stay tuned for the final report. That's, I think, Tommy's going to give it, the wrap-up. And then, of course, tomorrow we'll have great programs.